All right, well, good morning. It is officially 2 after 9 o'clock on this Monday following the 4th of July. And I'm sure everyone's kind of getting settled up to being in California because I think everyone was in California. But Christy, can you hear me okay?
Yes, I can.
Perfect. All right. Well, I'm going to go ahead and we have a small group because most everyone in Arizona is on vacation right now. So I'm going to go ahead and get started. But first of all, Christy, do you have any announcements that you would like to make?
Okay, so we've been doing these social media classes once a month that I'm absolutely obsessed with. So our next one is going to be this Wednesday from 11 to 12:30, and that's taught by Bo Bullard Media. You guys, these are so good. I don't even like video, and he's making me do them. So it's been kind of interesting, like, to say the least. I just think it's a great way to get started. If you guys haven't done video or you're interested in it, let me know. I'll let you know where it's at. Right now, we're going to be having it at Pioneer Title on High Street. It's been filling up, so we've had to move across the street to have this at a different location because of the size. So it's depending on how many we have. It'll be right there in the High Street area, though. Okay, on July 22nd, we have our Women's Council of Realtors Happy Hour in Mixer, and that'll be from 4 to 6 on July 22nd. Women's Council is really growing. We are actually the third year as sponsoring them, and I'm really enjoying it. We've had a lot of new members. I think we're almost at 100, which is really cool. I think we're one of the largest in the United States for Women's Council of Realtors, which is kind of nice. We are going to have our next mortgage class, our in-person mortgage class taught by Sean Wohland. And this is going to be bi-monthly, you guys, but the next one is July 24th. So that's at 11 o'clock. We do a little lunch and learn. The last one was really good. We had our first one in June. Our first one was in May. This one will be July 24th at 11 o'clock in our office. So let me know if you're interested. Sean, do you have a topic you might want to talk about, or you're just going to go over whatever is happening at the moment?
Yeah, we're going to go over kind of the ins and outs of the mortgage industry, what's different, how to prep your buyers, and just to go over some of the things that are really important for you to know as a real estate agent in this market and how to help prep your buyers for success.
Perfect. And then on the 28th, we are going to be paddleboarding at Lake Pleasant. That is an all-day event. So if you're interested in that, let me know. July 29th, we typically do our pickleball lessons at the JW, but it's way too hot. So we're going indoor to Chicken and Pickle. And that'll be July 29th. Beginner lesson will be 4 to 5, and the more intermediate advanced lesson will be from 5 to 6. So let me know if you're still interested in playing pickleball. And then I'll only say that we will be back live for Sean's Monday Mortgage Update on August 4th, Monday, August 4th. So that's all I have for you right now. And we are working on August and September schedule. Thanks, Sean.
Perfect. You got it, Christy. All right, guys. Well, let's jump right into it. Let's go and get into today's Monday morning mortgage update. But before we do so, I'm going to start it off with a little humor just because, that's how I roll. So this is the dad joke of the day. What did the sushi chef say to the honeybee? Wasabi! Sorry. I know it's bad, but hey.
Oh my goodness.
Oh, I gotta love it. All right, so what happened over the week? We had the one big beautiful bill pass. There's a lot to unpack here. There's a lot that has to do with real estate that's in here, which I think is going to be very helpful to us. Let's jump right into that right now. So how does the one big beautiful bill affect real estate? First off, they made the mortgage insurance deduction permanent. That's a good thing. The SALT, which is the state and local tax deduction cap, that was actually increased from $10,000 to $40,000. So that could really help high tax states help their real estate market because it'll give you a little bit more of an increase in that deduction. And then mortgage interest deductible has been made permanent with a cap of $750. There wasn't any talks of increasing that in the big bill. It kept it at $750, but it made it permanent, so that can't be removed. And then there's also a lot of low-income housing improvements. So some tax credit expansions, some opportunity zone program reforms. There's some rules that are targeting rural and tribal areas. It's going to give incentives to builders to build homes in areas that are lower income or are lower in purchase price. That's going to really, I think, help. Not immediate, because this does take some time to really hit the markets, but it's going to increase the affordability in the future. So that's a big win. So we're going to see how it all comes together. Some of the fears that some people have on the one big beautiful bill, it's the funniest name ever, is that it could be inflationary because of the tariffs. However, the tariffs have brought in a lot of money, more than most people have expected, which could have and should have a good impact on our overall deficit, which could be deflationary. So there's a back and forth here on how that really will affect things. Time will tell, but there's a lot of trade talks being talked right now between Europe, Canada, that are all in the favor of the United States. So let's kind of go into what happened last week as well. Well, mortgage rates don't like strong economies. So basically, if the economy is strong, it can afford higher rates, so rates are kept high. The U.S. economy added 147,000 new jobs in the month of June, which is hotter than expected. It seems like they're always hotter than expected. We'll see if there's any revisions, but what did that do to mortgage rates? Well, mortgage rates went up a little bit on the heels of this, and unfortunately for us, that means a little bit more expensive rates for our customers, but the unemployment rate did fall to 4.1. So we'll see how the updates to these numbers, they always revise them, and usually they get revised down by about 33%, which would actually put them where they were expected. Unfortunately, rates don't get better. We just get stuck with the negative that this hits. So here's where we are. Since last week, since the employment numbers came out, we dropped a little bit every day. We kind of went below, if you see this line right here, I'm going to annotate this real fast. If you see this right here, we went below this Fibonacci level today. That's not a good sign. Most likely we're going to continue the drift downward in value on our mortgage-backed securities, which means rates are going to get more expensive. I was hoping that would hold today, but it did not. So rates are a little bit worse than they were beginning of last week. Unfortunately, not a ton, but it is a little bit. Here's where we really need to hold the line. So if you look at, hold on, let me get my eraser out and get rid of this other. If you look at this one right here, my annotation. Let me get rid of this little guy. And if you look, we pierced all the way through, and this was last day, through the 200-day moving average, the 100-day moving average, and now we're up on the 25 and the 50, and we've gone through it. So this is the 10-year. Odds are, if we continue to go through here, there's a lot of room for the 10-year to move all the way up to 4.588, which would not be a good thing for mortgage rates. So looking at we have a bias to lock. However, tomorrow is a big day. So we really want this 10-year to hold beneath this 25-day moving average. That will be good for us because tomorrow we could see good news. And we'll go over that in just a second here because the economic calendar is showing the CPI for tomorrow. The Consumer Price Index, Product Index is coming out. That's the inflation numbers, and that's going to really hopefully help us. So let's kind of see where rates are right now. 30-year fixed, we're still in the high sixes. They are going to go up today. This is based on closing on Friday. So this will be a little bit worse as we go through the day. Now this, keep in mind, this is based on 25% down, 780 FICO, single family detached, the perfect scenario. This is the average for the nation. You could have points built into this. So this is just kind of what the average of what people are locking to give you an idea of where we're at. 30-year fixed on the FHA is on the low sixes. A lot of people are doing buy downs, so you'll see a big discrepancy or big drift lower on that. As you can see, the rates on the ARMs are in the low end as well. So that's seeing some value, but that's typically on the more jumbo style. But we are seeing some adjustable rate mortgages being somewhat attractive when you have more down payment. And then the VA obviously kind of tracks the same as FHA. So that's kind of where we're at as far as rates go. Here's what's happening this week in the actual economic calendar. We've got the CPI, which is tomorrow. This is the big market mover. This is the one that we all look at to see what's happening, because inflation is the enemy of mortgage rates. Hopefully this will be a nice low number and it will help bring our rates back down. Hopefully rebound from the loss we've seen over the last few days. PPI again on Wednesday, producer price index, more inflation numbers. We've got some jobless claims coming in on Thursday, along with some retail sales. So it's a big week ahead of us. We're going to see some housing starts come out on Friday. It's going to be interesting to see how builders move forward with the one big beautiful bill incentives that they're going to have. So that's going to be more of a lag as far as us seeing any benefit from that. But it's going to be an interesting week. So one thing a lot of my friends and family and coworkers and colleagues are asking me is, when is the Fed going to cut rates next? Like, when is that going to happen? Well, it's most likely not going to happen in July. So if you look at the overall consensus on what's going to be happening for the month of July, you'll see 4.7%. 4.7% is the predicted probability that the Fed will cut rates this July 30th. In other words, it's not going to happen. So if you look more at what's going to be going on towards the September, it's a lot higher. So, but notice it's not like 80 or 100%. It's kind of in the middle. So, and then October, it's in the middle as well. So we're going to keep an eye on this. Don't expect the cuts to come quickly when we see employment numbers the way they are. If we see low inflation continue, maybe that will give the Feds a little bit more of a incentive to cut. But if you see employment numbers continue to be strong, don't expect Fed cuts. So that's why we see very little probability of them cutting now in July. So remember, keep in mind the Federal Reserve, that rate does not affect long-term mortgages. That affects short-term money, home equity lines that are variable, credit cards that are variable in rate, that type of debt. So cutting that would absolutely be a very nice little boost to the economy, because it'll lower everyone's minimum payments on credit cards. But you're not going to see that if the economy stays strong, and they're going to watch the jobs numbers and the inflation, because that's really the only two things the Fed cares about. Other than that, that's basically it. We have the normal predictions that were put together. We do see rates going to be towards 6.1 at the end of the year, which is still on par to be very good. Keep in mind, that's going to be the average. We'll see if we get there. I hope we do. But it's going to be better than it is now. I just don't think it's going to be as quick as everyone predicts, especially when rates or the employment numbers continue to be strong. So that's kind of where we're at. Don't forget to watch your email. I will be sending this out to everyone in the recorded version. And then also zerodownpurchase.com is a new website I put together. Zerodownpurchase.com. It outlines a number of different options available with zero down for different types of mortgages that we offer. And so you can check that out whenever you would like to as well. Other than that, that's our mortgage update for the day. Hope you guys are having a great week so far. If you're still traveling, safe travels, and hope you all had a wonderful 4th of July. And I'll open it up for any questions that you may have at this